Hello, everyone, and a very warm welcome to today's major markets update for February 1st, 2023. We are at the first of the second month of the year and our first webcast for this month, with a couple more to follow, of course. And what a volatile Federal Reserve Day it was, as usual. But we have finally good, clear resolve on the fact that we are in the third wave for most indexes in the C wave of the larger B wave. It's quite the mouthful, but we got to understand the bigger picture as the frame within this where the smaller waves move themselves. The only bad apple so far is the Dow Jones is not following through yet. So let's see how that one goes. It's a little bit slow. No bottom line for today. I'll update that later. Let's first look at the NASDAQ. The NASDAQ has been moving a little bit above and below the 200-day moving average. Last Friday, it closed above it. If you can see the cursor, and maybe if I zoom in even more, you can see it. We dropped below it on Monday, back yesterday, even higher today. So I would say we've cleared the 200-day moving average. We already cleared the downtrend line in place since the all-time high last week. 3 separate occasions we closed above it, and now we are moving higher. This is soon a 100% bullish chart with price above the 200-day, the 10, the 20, and the 50. But now the moving averages need to align bullishly as well, meaning price above the 10 above the 20 above the 50 above the 200. That's a 100% bullish chart. So we're not there just yet, but we're improving. And as you can see here, we've had quite a lot of positive divergence since May of last year. It takes a long time for it to kick in. So divergence is only divergence till it's not, but it takes a long time for it to kick in. This is on the MACD. You can see, right, we're making lower lows, but the MACD is making higher lows. So we've broken out of this downtrend line already the week before. We're now back above the 200-day moving average. We've not been above the 200-day moving average since early 2022. So this is, of course, a significant development, just as it was on Friday. Then on Monday, it was, of course, a significant development. We broke below it. Use the 200-day moving average for long-term trading. Go above it, you go long. We close below it, you go short, or you close your position. You would have had a tiny little loss here twice if you go long and short, but you would have prevented, of course, massive drawdowns if you would have closed early 2022. That's the way it works, and it's not only winning trades. There will be tiny little losses compared to what you had prevented. Moving on then to the Dow Jones, this is still below 34,350. That's been the lid. It's been under for quite some time, and we need to break above it. If we can break above it, then we have this nice 1, 2, 3, 4, 5, 3, 4, 5 setup in place. It tried today, but it closed below it. We did get a little bit of a higher close, so that's good, but now we need to get above 34,350, please. So this is so far still like 5 up, 3 down, 5 up, 3 down. In yesterday's futures market update, I showed you it already had the potential to do 5 up, but we didn't get it. If you'd followed along the futures, by the time we opened this morning, we'd already dropped below the levels of where a usual fourth wave should bottom. I was tracking the potential for a 3, 4, 5 setup with 1, 2, 1, 2, 3, 4, 5 of 3 completed. If you remember that, that didn't happen by the time we opened. So that was already the clue that we would see lower prices for this index. And we got lower prices, a nice C wave. And we're now off to the races, it seems, but we need to get above 34,350. So let's see how it goes. If we don't, then something else is going on for the Dow Jones, and we'll have a typical divergence that we had, for example, late last year, where everything else went lower and the Dow Jones pretty much went higher. So We'll have to see. Not there just yet. I need to see the breakout, the 1-2 level. We're holding the 50-day moving average for 3 times now, but I want to see it now continue to move higher. Let's have a look at the NASDAQ. So indeed, Monday's drop was the wave 4. I was a little bit taken aback by the fact that it got deeper than I would have liked to see. I would have liked to see the NASDAQ100 hold at around 11,960. We got, I think, about 11,900. So of course, it's really in the margins. But now we have a nice 1, 2, 3, 4, 5 setup in place. We've already reached the ideal green wave 3 target zone. Looking at the futures market based on Meta's earnings, it looks like some right to go for this 5 of 5 of 3. We're using ideal target zones. Now the market can decide if it wants to use those or not. It did use the ideal 3 of 3 target zone here in gray. It exceeded a little bit the ideal 4 of 3 target zone at the low on Monday, and then we had a nice 1-2, a nice clean ABC lower. That was today's low is micro 2, and then blast off. Today is really the heart of a third wave. I like it, and I expect higher prices. Zooming out the daily time frame, I see no reason to change my tune on this wave count, except then for Monday, the unpleasant surprise so far moving along quite nicely. Let's see if we can target somewhere around 12,630-ish. That would be really ideal. Drop lower for a wave 4 or 5, etc. So maybe Apple and Amazon's earnings are not going to be so great, but I'm not going to guess too much on that. Let's take it day by day. So far, so good. We have this nice 1-2 setup in place since Monday's low. This still looks good for higher prices. And look at the semiconductor. Thank you so much, AMD, for this one. Its earnings were, I believe, well received, though not great, but well received. The blue line is what we had been expecting pretty much since December. So it's really filling itself in with an ideal target between 3205 and 3675, pretty much. Don't know yet where it's going to end. I haven't really detailed the wave count here, but we're moving higher, and that's the whole point. The whole point is look at the MACD. There is no signs of letting go. We have potential here for some negative divergence, but we haven't even reached the minimum upside target for the C wave. Doesn't mean we have to get there, but it seems quite nicely aligned for it. One of the indicators we can add, for example, here is the Bollinger Band, and then we're going to add some moving averages as well to see how we are doing on that front. If we're in a bullish regime or in a bearish regime, right? That's what we need to assess. And let's have a look. I'm going to add the 10-day simple moving average as well, so we really cover the short to the long term to get a nice idea if we have a bullish setup or a bearish setup. And price is above the 10, which is above the 20, and the 50 is now above the 200-day, which starts to bottom out. So this is soon a 100% bullish chart. And then we have to give the benefit of the doubts to the bull. We had a nice breakout here above the November-December highs. And based on simple symmetry, if we do simple symmetry of the price action here, this price action. So we've been in this box for quite a while. That was the breakout. So it's kind of like a cup and handle type of setup. If I do a technical analysis, and then we're going to see how high this is going to go. Not too bad to the 100% extension. I like it, so I'm going to keep it on the chart. That is going to be our upside target with, of course, the usual daily up and downs in between. I see no reason to change my tune. Look at the MACD, long and strong, RSI, long and strong. Looks like some potential negative divergence. Can easily be broken. Divergence is only divergence till it's not. Here is the S&P 500 hourly candle chart. So we had our wave 1. Alternatively, that was a wave B. So there was a possibility for price to drop all the way back here to 39.60. It was very possible. We dropped as low as 4,037. That was it. So we had a 1-2 setup, and then the breakout. Then you know you have a wave 3 on your hands. And I personally bought the breakout, and I'm quite happy with that trade. 3-4, and I think we should see a 5. So we are now in this wave 3 of 5. So then you know we still have some ups and downs to go before all is said and done. If you see that a minute wave takes about 2.5 days, then a minor wave should take probably a week or a couple of days, 5 trading days. The intermediate wave should last several weeks maybe. So we're still ways out. And then another intermediate 5 is going to last probably a month. So this is a month, 2 months, 1 week, 2 week. So we're still easily, I would say, 3-4 months out before we should top out, which brings us indeed to possibly May, where we sell in May and go away. So this is not correct in time. This is just trying to make things legible for you. So I see no reason to change my tune. Next target here is about 4,200. That'd be ideal. IWM moving higher nicely as well. It broke above resistance yesterday, and it is now already getting close to the minimum upside target, but I still think we can have some more in store. And I'm still looking higher for as long as we hold Monday's low. As long as we hold Monday's low, I'm going to look higher. I don't see a reason why we should not look higher. Look here, we had potential negative divergence, and as you can see, the RSI broke above it. So divergence is only, divergence is not. Price then can decide to react on it, reacted on it for a day, and that was it. And now we're above it, so we have increased strength. Look at the MACD, increased strength. Yes, we have some divergence, but the MACD is pointing higher, just as we do here, pointing higher. So expect higher prices even after a dip. I don't have a full wave count on it yet. There's so many waves. I just want to kind of just point out that what are we looking for? Again, somewhere around 200 plus minus 2, I think would be a really nice ideal target for the IWM. Market breadth wise, proving this is the bullish percent index chart for the NASDAQ. It's at 52, so now a majority of the stocks on the NASDAQ are on a buy signal after months and months and months of positive divergence. So we have finally broken above the recent highs, and I think we're looking good for price, that is. How we're doing on the AD line. The AD line is a very important line. As you can see, the AD has been stuck between November and October, actually all the way into November, on these two downtrend lines have broken above it. It's positive, it's leading. It means that we should see higher prices. We need to see negative divergence to tell us that we're going to see lower prices. How we're doing on the new 52-week lows. So far benign, 26, a little bit up compared to yesterday. That's okay. We're still in the okay zone. I don't have the final data yet, but I don't expect it to go above 50. So it's still benign. I'm not too concerned about it. As long as we're below 50 on both, we should be good. How we're doing on the McLennan oscillator. It's at 54. Nothing crazy strong, but the bulls are in charge because we have a positive reading. More stocks are advancing than declining. As such, the summation index remains on a buy. The summation index adds yesterday's McLennan reading to that of today, and yesterday's reading was added to the day before yesterday, etc. So as long as you have positive readings, this one keeps increasing. We've had a buy signal here since early January, and it is working real nicely. So far, so good. This one remains on a buy as well. That's the whole point of these indicators. The AD line is on a buy. Why? Because it keeps rising. The new lows is on a buy. Why? Because it's below 50 on both the NYSE and the NASDAQ. The McLennan oscillator is on a buy. Why? Because it's positive. The summation index is on a buy. Why? Because it's above its exponential moving average. And then we're going to look at the PMO buy all sell all indicator. It remains on a buy. It's topping out, but it remains on a buy, and I'm pretty sure today will be the same setup. I don't think we'll get a sell signal because we've moved higher. So overall, I remain bullish, intermediate to longer term over the next days to weeks on most of these indexes, with of course the Dow Jones now needing to hurry up to get its 3, 4, and 5 setup in place. We need to break above and close above 34,350. If not, then something else is going on, and we'll have to reassess the charts. Okay, but otherwise, I continue to see 5 up, 3 down on the Dow Jones on many time frames. But at some point, we do need to see these breakouts as we're seeing on the other indexes that tell us this is a bullish development. All right, so that's all I have for today. Don't have much else to add other than, looks good. Monday was definitely a little bit of a scare, unexpected, but I think we resolved it quite nicely with a nice 1-2 setup. We're holding the lows. We continue to make higher highs and higher lows. That is bullish all the way since December. Continuously higher highs and higher lows. That is bullish. We might see some intraday pullbacks, daily drops, that type of stuff. But I think we're back on track with this scenario to 4,400 ideally for the S&P 500. Take care, trade safe, and I'll see you all on Friday. Bye.